Hey guys, welcome back. I hope you had a really great weekend. So, we are about to start another week of trading. The last 2 weeks we have had some solid down weeks, and last week right here we did open SPY with a move up to start the week to try and get above the 50-day moving average and the 4-hour 200 moving average. So rejected at the 50-day, then pushed underneath the 4-hour 200 moving average, and then dropped to the next level of support, which is the 1-week 35 EMA and the 200-day moving average. So most of the week we did trade in those levels, around those levels. Tuesday, Wednesday, you could see that we bounced above the 200-day moving average, tried to hold the 35 EMA on the weekly, but the 35 EMA on the 30-minute time frame kept us down. Thursday, we gapped down underneath the 35 EMA weekly, dropped down to the 200-day moving average, and then we did get underneath it. We did have a support gap right here, bounced right on top of that to close above the 200-day moving average. Now, if you guys aren't following me out on TradingView, you definitely should. I post my charts out here almost every day, and in SPY, here's SPY for Friday, I did publish this chart, and if you look just underneath it, there is a button that says grab this chart. When you click that, that populates onto your browser so you can trade this exact chart. And all of these levels will be here as you change time frames, and you can scroll around and you'll see live candles on this chart. And you could see that support gap was right here. If I play this idea out, you can see that we dropped down to this support gap, and that is where we turned back around to close above the 200-day moving average, and we did stay completely within that trading range. So do yourself a favor, come and subscribe out on TradingView, and when I don't have the charts on a video, they will be here. So I'll have that link in the first comment. So that was SPY, SPX, same thing over here. We opened right here with an attempt to get above the 50-day moving average, so move above the 4-hour, and then rejected at the 50-day, and then smacked back down all the way down to the next levels of support. So we broke underneath this previous support right here where we filled the island gap, and we dropped all the way down to the 50-day moving average. At that level, we tried to hold the 35 EMA, which is a huge level. I'll zoom out to that in just a second. So 35 EMA right here, Tuesday, Thursday, bounces on that 200-day moving average. Couldn't hold it. Thursday, we gapped down and dropped down to the 200-day moving average, lost it, and did manage to find support on this support gap, and we did close above the 200-day moving average. So look at these moving averages. We have the 50-day, the 4-hour, the weekly 35 EMA, the 200-day moving average, and then the 30-minute 35 EMA, constant resistance ever since we made all-time highs back here. So steady resistance, and you could see for the week after we got rejected from these moving averages, 35 EMA regained control, and for the rest of the week was resistance. We did close above that level. We did close above the 200-day moving average, but underneath the weekly 35 EMA. So we did bounce on this support gap, but we closed underneath this bear gap. So taking that to this is the daily time frame, so you could see that 200-day moving average, but what I meant to click was this one. This is the 5-year chart, 1-week candle, and we closed right here on the weekly 35 EMA. Weekly 35 EMA has been a very steady support ever since we hit the bottom down here. This is October of 2022. We got back above the 35 EMA, let's say right here. This is April of 23. And you could see that whenever we came up to that level, we saw it as a support. Once we print a red candle, it looks like it is possible that this week we print a red candle. We have one chance to get back above it. You could see right here we printed one, we got above it. One, got above it. Right here we printed one, Couldn't get above it these next two candles. We stayed right around the 35 EMA on the weekly time frame, and then we lost it, and that took us all the way back down, not in a straight line, but back down to the 200 week moving average. So this is a huge level. We are at a critical point. If we do lose this level, we are likely going to come back down to the 200 week moving average, and that is currently at 46.48. So that definitely wouldn't be in a straight line, and it could be over the span of many months, maybe even heading into next year. I know here we focus on day trading and the trading range for the very next day, but this is something just to keep an eye on. I personally don't trade this far out, but I do like to have a general view of where we are in the bigger picture. So SPY closed up on Friday. I didn't actually go over Friday, so let's go over that real fast. Friday in SPY, we opened just a little bit above this 200-day moving average, and we dropped. We lost it. Support gap underneath brought us back up above the 200-day moving average, and we closed just a little bit above that 35 EMA. Basically, same thing in SPY, and we closed up 0.56% in SPY, 0.55 in SPX. VIX is up 9.41%. That is not Friday's close. That is already today's VIX. So VIX popped in pre-market, and on Friday we did close within the implied move. All right, I feel like we went over a lot there. So QQQ, we opened the week last week right here. You can see we are in a pretty steady downtrend here with that 35 EMA as resistance. All-time highs back here. Once we got underneath and rejected 35 EMA, and especially once we got underneath right here, this cross down, 35 EMA, underneath the 30-minute 200 moving average, that 35 EMA has been in control, and on Monday last week, we did try to get above it. 4-hour 200 moving average was right here, pushed us back down, and we traded the rest of the week around the 35 EMA on the weekly and the 200-day moving average. So we did drop down. This is Tuesday right here. We bounced on this hidden gap right here, got back above 35 EMA, smacked us down, dropped back down, 200 moving average tried to get us back above. This is the only place right here where we did see some blue candles, a little bit of hope for a swing up, but we did gap down on Thursday back underneath the 35 EMA. We made a bear gap right here, and we dropped. We dropped underneath the 200-day moving average, and to close the week, we were unable to get above it. So huge down week in QQQ here. We lost two key levels, the 35 EMA on the weekly and the 200-day moving average. Now again, let's hop over to the weekly time frame, and you could see how important this weekly 35 EMA is. So when we're in a bull run, that is a support level. When we're in a bear market, it is a resistance, and we're right underneath it. In QQQ, it's a little bit easier to read. As soon as we print a red candle, look to that 35 EMA as resistance. We don't have any underneath right here, but we did see it as a support whenever we did come down. It looks like this candle right here is the only one that actually closed underneath it. And then we got right back up and made another swing. So definitely keep an eye on this level. Once we do print a red candle, we tend to come down to the 200-week moving average. Not in a straight line. You could see we dipped under, saw that as resistance again before getting pushed back down, and then spending a little bit of time there. So this could be a target if we do close this week underneath this 35 weekly EMA. This right here is a bearish divergence. You could see where they cross over is lower over here while we make higher highs. So definitely lots to know about on that time frame. QQQ closed up on Friday. So Friday we did drop down, took it almost down to the bottom of the implied move, and then we swung back up with the rest of the market, did not get back above that 200-day moving average. Closed up 0.74%, and we have really big trading ranges right now. So up 0.74% doesn't look like a big move. If we were in a more bullish market, this 0.74 would be almost the entire trading range. But because we have such high volatility, Friday's trading range alone was 2% in each direction. So it looks a little bit deceiving, but we did have a decent up day, 0.74%. VXN closed down 2.59%. Surely it is green in pre-market right now since we are down 1.26% in pre-market, futures down 1.32%, but on Friday we did close within the implied move. And IWM opened the week right here, 35 EMA on the 30-minute time frame. Consistent resistance. We did close right on top of the 35 EMA, but not a single blue candle. So Monday right here and drop, then we gapped down, took it to support, and then tried to test that 35 EMA on the 30-minute time frame, and we're unable to get it for the rest of the week. Friday we did drop down just underneath this support level, and we did pull back up to close green, up 0.33%, and we did trade completely within the implied move on Friday. All right, and lastly, we have DIA. DIA opened the week right here, and we did pop up. We actually opened DIA above the 50-day moving average and above the 4-hour 200 moving average. So we opened right here, popped up to the 30-minute 200 moving average, and got rejected at that level. So really fast, I'm going to put in the rest of this gap because I forgot to extend it out. So right here, we do have a bear gap. We popped up to hit that 35 EMA, and then we dropped. Sorry, that wasn't the 35 EMA, the 30-minute 200 moving average. So the rest of this gap still open and a big resistance to look up to if we do pop up. It's pretty far away still right now. So 30-minute 200 moving average dropped us all the way down underneath the 50-day moving average, underneath the 4-hour, and we took it all the way down, closing out this bull gap and to the 35 EMA on the weekly time frame. And we stayed there, we chopped there for a while. It's a big level. So we dropped to that 35 EMA, swung to the 35 EMA on the 30-minute. So it was between the weekly time frame and the 30-minute time frame. So then we got pushed away at that 30-minute 35 EMA, dropped down to the weekly 35 EMA again, and then swung back up. So this was Tuesday, then Wednesday, then like the rest of the market, we gapped down here. And clearly DIA, I tend to the least here during the week. We do have a bit of an open gap right here. So that is a resistance level to watch for. So we gapped down on Thursday, dropped to the 35 EMA, and at the very end of the week, we did end up closing above it, both the weekly and the 30-minute time frame here. So we did drop underneath it. This was on Friday with the rest of the market. And right now in pre-market, we are down 0.99%. So if we do open up near that, we are, you can actually already see right here. So pre-market, we're at 424. So we're back underneath this 35 EMA. And it was a struggle to hold this level last week. Let's take a look at that on the 5-year time frame. This is where the 35 EMA on the weekly time frame lives. And you could see it is a clear support, and we are right at that level. So watching to see if we do print any red candles. If we do, we have a small window of opportunity to get back above it. If not, we're going to see that weekly 200 moving average. So that is a potential target if we break this 35 EMA. We do have a red signal line on this time frame. Other times that we have had this red signal line, this took us back to the 35 EMA. So if we do break it, this red signal line will play out until we get an oversold signal here. So a lot to know. And of course, as day traders, we are looking into the next day of trading. So Good to know this stuff on the bigger time frames, but let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications. And if you want to help support this channel, there's a thank you button underneath. If you took an awesome trade and you want to say thanks, that button is always there, and that helps me to bring more awesome content. All right, so tomorrow's implied move, this is in SPY, is between 568 and 584. And that is from options. The 30-day average volatility is a little bit wider here, 566 to 586, and the implied move on Tuesday's contract, 566 to 587. And right in the middle of the trading range today, we have the weekly 35 EMA and the 200-day moving average. And you can see that momentum is still up. You typically don't want to go short at a upward facing moving average, and this is sideways. It's definitely turning downwards, but that momentum is still here. So we might do some consolidating here until that turns. It may not be that long if we are to go lower. So then let's do this in order. To the upside, 35 EMA right here, and then above that we do have this bear gap from last Thursday. Top of that gap is just underneath the top of the implied move at 584, and then 587 is the top of the implied move on Tuesday's contract. So if we do pop up today, 584, 587 would be a great spread to sell. And to the downside, we have the 35 EMA. This 35 EMA has been a force. It has been a strong resistance all the way from off the top here. So 35 EMA is no joke. It is just underneath us, and we did close above it on Friday. So 35 EMA, always know where your 35 EMA is, just underneath that 200-day moving average. We've got 568 as the bottom of the implied move, and just underneath that we do have this support gap, 566 on Tuesday's contract. And if you notice, I actually started just writing every level off to the right here. So sometimes I'd have them all over the place, but now we have today's trading range, tomorrow's trading range, and then all the levels that you should know kind of just outlined in that third panel. So that is how I'm doing things going forward. SPX, the implied move over here, 56.95 to 58.55, and we do have that same sideways momentum here. Weekly 35 EMA, 200-day moving average moving right across the center of the next 2 days. Tuesday's contract, bottom of the implied move, 56.65 to 58.75, and to the upside, weekly 35 EMA right here. You could see we did see some chop around that level last week. This is Tuesday, Wednesday, then Thursday we gapped underneath it. So 35 EMA right here, bear gap from last Thursday just above that, and the top of that bear gap is the top of the implied move as well, 58.50. 58.70 is the top of the 30-day average volatility. You can see a little bit of resistance there, and 58.75 on Tuesday's contract. Underneath us, 200-day moving average. That is a big level. If we lose that, then 56.95 on the day. Just underneath that, we have Tuesday's contracts, bottom of the implied move, 56.65, and then this support gap. This support gap, let's zoom out and see where that goes. It is support from quite a while ago. I'm gonna keep going. And right here. So that is last October. So before the election, let's actually look at that on this time frame. This is the daily. So that goes right here. So this is from last September, and you could see that that was a previous resistance level. So important support level. We did bounce on it last Friday, and let's see if that holds. So that is today's trading range right here. And let me see if I missed anything. Looks like I got everything. The 35 EMA is maybe the thing I didn't mention. We have seen that as a pretty solid resistance ever since we made all-time highs, and then we gapped down, and then we saw that 35 EMA as resistance, especially once it crossed underneath the 30-minute 200 moving average right here. So 35 EMA has been holding us down, so definitely keep an eye on that level. And QQQ, today's implied move is between 483 and 501. 30-day average volatility 479 to 505, and 481 503 on Tuesday's contract. So just looking at that setup itself, I would say that if we pop 503 505 would be a great bear call spread, and then on the downside 481 479 bull put spreads. That's what I'm going to be looking to. And just above us we have the 200-day moving average, and that is a huge level. We closed underneath it. We also brought the 35 EMA underneath it. That is a bearish signal, and clearly we might see some follow through. Futures are deep in the red right now, and pre-market is taking us to the bottom of the trading range here, or I'd say halfway down. And then so this is where we are right now with futures. Bottom of the implied move 483 481 on Tuesday's contract, and then above us we have that weekly 35 EMA. That is a huge level. Really, that level should be the focus of the entire week. If we close underneath this 35 EMA, the chart suddenly takes a drastically more bearish turn. So this down gap from Thursday is sitting right on top of that bear gap, and then that weekly 35 EMA is running right there as well. All right, so that is QQQ. IWM, we don't have a whole lot of levels in IWM, just the 35 EMA, but look at how important this 35 EMA is. It has held us down ever since we crossed down right here. This is the 30-minute time frame. We do also have a cross down on the 1 hour. I'm sure there's more time frames, but I don't have them charted out. But this 35 EMA has held price underneath it. With each drop, we come back up to it and see it as resistance and sell off even more. So really big level. It's the only level in our trading range, with the exception of this support right here, which we did break under, but we did reclaim as well. So 204 is support right here, and then 35 EMA. So the top of the implied move on the day is 210, 211 on Tuesday's contract, 30-day average volatility 212. 202 is the bottom of the implied move to the downside. 201 on Tuesday's contract. 30-day average volatility takes it to 200. So we have a 1.79% implied move today, and that is based on Friday's close. So interesting trading range in IWM. And lastly, we have DIA. This is a weekly contract. We don't have dailies over here, so this is for the entire week. Of course, as we saw last week, we can close underneath it or above it, but this is what the trading range is based on Friday's contract. So we have the 30-minute 35 EMA. That is a huge level. You should always know where that is, especially intraday. We return to that level constantly, so we'll drop, return to it, drop, return, drop, return, or we'll pop up and we'll return. So 30-minute 35 EMA, especially on the day trading charts, you need to know where that is. So right above that, we do have the down gap from Thursday. Top of that gap is at 530, so that is our first resistance level. And then above that, we have the 30-minute 200 moving average. That is another level that we do tend to return to often on the day trading time frames. You could see right here we were away from it for a minute and then we popped back up, and even though we got rejected, we did see that level. So even if we do move lower, that 30-minute 200 moving average, we do see it often. So we could pop up to that and then get pushed lower or break above it. If we get this 30-minute to 35 EMA above that, then we might move higher. But above that, we have the 4-hour 200 moving average and the 50-day moving average. The momentum there is flat. So if we do come up to that level, I wouldn't necessarily go long. I wouldn't expect to shoot higher. That momentum is flat. With that 30-minute 200 momentum coming down, this is flat leaning bearish. And then underneath us, weekly 35 EMA. That is a huge level. I showed that in the first half of the video. And then underneath that, 200-day moving average. The momentum there is facing upward. It is flattening out for sure. And the next support is at 418, which just happens to be the bottom of the implied move. And that goes back to, let's see where that is, right here. So we do have support right here at 418. So let's see if that 200-day moving average can come up and add to that support right there. So there you have it, guys. This is the first time I've done the trading ranges in the video as opposed to on TradingView in a little while. And I think it's a good thing to do for the new people that aren't used to reading this chart, as well as the people that have been here for much longer. So I might do this for the next week or two, do the trading ranges on a video instead. So make sure you're subscribed here and on TradingView, because if they're not on TradingView, then they're over here. So there you have it, guys. Have fun, trade safe, make sure you take profits when you're up,